Right. Hey there, everybody over on Twitch and YouTube. Good to see y'all. Let me share my screen here, and then we should be good to go. There we are. So, hey there, everybody. Good morning, good afternoon, good evening. I hope you are all having a good trading day so far today. Um, who were maybe on with me a little bit earlier this morning. We were looking at NDX for potential. I took one for those of you who are not familiar with. He is one of our futures traders here at Simpler Trading. Hey, Dakudo, good to see you. Good morning to you. Joe's one of our futures traders here, and when we were on the mic earlier, he was looking bounce back up based off his technicals, and certainly that was and what I was looking at too. So into a trade in the mastery here, close to that profit potential. So let me 1 second. Okay, let me try and fix that here. Thanks, Jane. I appreciate that. We're the fave. I like hearing that. Let me fix one thing on my audio for the stream and see if that to it will help out. Hopefully that's better. Um, but yeah, we jumped into side, and I think I'm gonna go ahead and lock in the profits if I can get a fill here. NDX is a little hard to fill sometimes on the option side because it's not as liquid as it used to be. Which is a little unfortunate. But I will go ahead and take this quick win if I can, and that way we can focus on trading and answering questions here for the next hour. And I filled at $1 on that cover order, guys, for anyone in the mastery following along. And for those of you who didn't catch the trade, I will go over what I was looking at and what I did here in just 1 second as soon as I get out the alert. This trade has filled. There we go. You guys should be getting the alert over in the mastery. But let's talk about it really quickly. So I think this is a good example, and then we'll go back to SPX like we normally do. We'll talk about what the market might be doing, how CPI affected things. Any questions around trading, whether it is about what's happening now in the market, a certain symbol, and I will be more than happy to talk about it. Um, and Jane, yeah, so I have Jane's asking, didn't you start listening in on the strike zone mastery? How's your futures trading going? Overall, not bad, I'd say. I'm still just doing very small trades, if anything, trying to gather as much knowledge as I can, which I think is very beneficial and it is a good reminder if you are newer to trading, right? You might consider first paper trading so that you have a good idea of what you're looking at for your entries, what your strategy is, what your trading plan is. And then once you start to get consistent with that, you can start to go in with real money and apply it that way. So I've been dabbling just a little bit, Jane. I've just been trying to sit in the room whenever I can and I'm not busy either on the mic with you guys or doing other things in the background for simpler with the kids and trying to absorb everything I can. But for those of you who don't know, I know Joe talked about this a little bit earlier in the day. He has a class coming up, not this Saturday, but next. He is resetting his 10K account. For those of you who don't know, a while ago, Joe had a $10,000 account. He's grown it up to $400,000. And so he is doing a reset back down to 10K with the class coming up. So for those of you who are interested in learning how he trades futures and how he was able to grow his account that much, certainly check out either the replay webinar from the one he just did, or I know he's doing another free webinar next Wednesday. And certainly, if that sounds good to you, if that's something you're interested in, you can sign up for the class. I know I'm looking forward to listening in on that, and looking to maybe join him on that 10K reset for the account. So it's going overall pretty well. Um, but I also, of course, am focused on doing my own style trading with options. So let's talk about what I was looking at here, at least from my technical perspective, why I did and locking in the quick win we did just now. So overall this morning, the market bounced up off of CPI, but it basically was a non-event, which is kind of what I was talking about last week. I know I've talked about it overall this year, where CPI is just not the market mover it was last year. And here's SPX. Yes, Thinkorswim, I do want to continue using you. There we go. So here's SPX on a daily chart perspective. And if you asked me last year if I can point out, oh, this is a weekly chart. Let me go back to a daily. But if you asked me to point out what days were CPI last year, I could definitely at least give you a few where I'm like, this is definitely was a day where CPI happened. And it's because we had a lot of volatility around the news. We had huge daily ranges. We had gap moves. And so here's a great example. I remember specifically this was a CPI day here where we gapped to the downside, ended up holding support in 3,500 level, bounced up, right? We had a daily range of just shy of 200 points. And so it really sticks out on the chart where you can go back and be like, "Oh, yeah, that was, a volatile day." And just because it's still fresh in the memory, I know that was due to CPI, right? The catalyst was CPI for that volatility. And then we had a stronger trending move that followed through on that back to the upside on our charts. If you ask me what day CPI has been this year, I can't point it out to you, right? I'd have to, like, actually go back, look at the dates for when those were released and say, "Okay, I think this was a day." Like, I think one of these days back here, for example, might have been, remember, it was trying to break resistance and then it couldn't and it dropped back down. But you can see it didn't give us the same type of daily range in terms of volatility, and we did not certainly get a strong trending move that followed through with it. We actually got some chop before it ended up reversing back down towards 3,800. And so CPI just has not been a big mover this year from what we have seen the last year, right? It's almost like the market has pretty much anticipated what the Fed's going to say, what they're planning. And so we're not getting those bigger daily ranges like we typically like to see, especially if you're more an intraday trader at heart like I am. And so because of that, and because the name of the game overall this year has basically been chop, the way to trade consolidation, there are a few different ways. The first way is to take advantage of the chop using theta decay style strategies like credit spreads, unbalanced butterflies, a strategy that can benefit both from a directional move, but as well as a not directional move, right? On credit spreads, as long as your short strike remains out of the money, you're profitable. And so that's one way you can go about trading that, and we actually in the mastery, whenever we were looking at the setup here in NDX, I did price out potentially looking at a credit spread versus directional trade. And I'm not a fan of the risk versus reward a lot of times on credit spread, so that's what kinda keeps it tough for me to trade consolidating markets because I really like to give myself a really small risk, really great profit potential, which usually comes from more directional trades. But the second way to go about trading consolidation like this is to actually trade the levels. And so what you look to do is once you start to identify a support and resistance level, whether it's from an intraday perspective like today, or whether it is based off of a more daily chart perspective, right? The idea is once you're at support and you can confirm support's holding, you look to play back up into resistance. And once you get up to resistance, if that looks like it's going to continue to hold and we're not going to break through it, then if you're still in, your bullish trade, you take profits and then you take a reversal trade. meaning you jump short and then play back down into support, and you just keep playing basically that zigzag kind of movement up and down to where you can get yourself an overall profit. So what happened this morning is we gapped up, tried to move higher, almost instantly gave it back. When I pull up SPX here in a little bit, you'll see SPX not as strong as NDX today. It gave it back up a bit more and struggled a little bit longer to get the bounce to the upside compared to NDX. And so that's why, first of all, I focused on NDX over SPX this morning just because it had a little bit more of that bullish strength to it after the, but then we got this pullback here, right? And so we pulled back down into support. This was actually Joe and I were on mic doing a little bit of a dual session together, and we ended up holding these levels overall. And I know he looked at a futures trade, but I really liked how support was holding. I liked that momentum had reset back down towards the zero line. And most importantly on this chart, I really liked the 1 hour time frame. And in particular on the 1 hour time frame, you can see the price pulled back into the 10 period simple. We held that as support. It basically tapped that level and then started to bounce back up. We had bullish momentum, which had reset towards the zero line and is now currently building back up. We have a bullish signal that printed right at the open and remained valid even to right now, right? So this is a bullish trend signal here. All 3 lines are in agreement, so that's usually a really good sign. And then what I really liked about this setup is that we still have an hourly squeeze. Now, the hourly squeeze may not fire, but the idea is if we're at the bottom of our support range for today, and everything overall is looking bullish. We had good resets here to where they can pick back up again. Then it's a good clue to at least play back up towards the top of the range to try and lock in a profit. And so that's what we ended up doing in the mastery. Like I said, I priced out eh, uh, a potential credit spread, and at the time, it was, like, around a 130, maybe a 150 credit versus a 350 risk. That is not what I like to see on my risk versus reward parameter, right? I wanna see that actually flipped to where I'm only risking about a dollar 30 with a profit potential up to 350, right? That's a much better risk versus reward scenario. And so what I ended up doing is we went with a 5-point spread. Usually, you can get into a good 10-point spread, but the market wasn't giving me a good fill on those, as you can see here with my canceled orders. I was trying to work that, and it just wasn't giving me a fill this morning, so I was like, "Okay, and so, I went with the 5-point spread to still stay within my risk tolerance because I think that's one of the most important things that a trader needs to be mindful of and aware of is to always stay within your risk tolerance. If you feel like you're chasing a trade, if you feel like you're paying more than you want to, that's what causes that dark side of trading to start to peek back in, and then all of a sudden you start letting your emotions guide your trading rather than the technicals. So I'm really a stickler at trying to stay within or under my risk tolerance for a trade idea for the day. And that's what we did here. So on NDX, I jumped into the 13,370, 13,375 call spread. So this was the original entry here. And I jumped into that. Actually, I had the order set at 70 cents because I was working it up. Got a favorable fill at 59 cents, which happens every now and then. So that was nice to see. Um, and so we jumped into that basically right around this level as the price was attempting to bounce back up. And so we were just looking to play back for a move into resistance. We don't necessarily need to get all the way to our strike levels in order for the value of these strikes to increase and allow for a profit. And as you can see here, if you just pure trade route, you would be able to over 100% return on the trade right now based on the mark being at 140. So we're nowhere near our strikes still, right? We're still 50 points out of the money on our strikes. But you can see how just that bounce up gained the value overall on these option strikes in general, right? The premiums increased because we're getting closer to at the money, and it allowed us the quick win. But familiar with the profit recite strategy, this is how I avoid the pattern day trading rule. And there are a lot of different ways to profit recycle, both from an intraday perspective and management, but this is just one of the ways to do it. So we jump into a debit vertical spread with that bullish aspect. And then as the market moves, what I end up doing is I open a credit spread. And what happens is by opening the credit spread, it turns the trade into standard butterfly. For those of you unfamiliar with a standard butterfly strategies on options, basically you can't lose on both sides of the trade. Naturally, when you put in all of the strikes and contract amount within the same order ticket as you can see here, you open it for a net debit, right? It's naturally a net debit style trade. But what I did is I waited for the underlying price to move in my favor before I opened the credit spread side of the trade. So what this does is it locks in a overall profit. Jumped into so just to get out my handy dandy calculator over here, we are in the debit spread for a 59-cent cost basis. Um, as the session started here, as for those of you who were on right at the start of the session, I was like, let me go ahead and cover this now so I don't have to pay attention to it while we're talking about things in the market here so I can focus on you guys and the questions that you're asking. So I decided to go ahead and cover it. You can see I was only in the trade for about 24 minutes in total. Sometimes I've had profit recycle trades fill like literally within a minute because of how the market can move quickly. Like last year, that wasn't uncommon to get into a trade and then all of a sudden have my cover order fill because of the quick move. Other times it might take the full day, right? It all depends on how the market's wanting to move. But in this case, I was only holding my risk out there for about 24 minutes, and then I covered it with $1. So what happens is I'm in 59 cents on the debit spread. I fill the credit spread for $1 credit, and so it actually creates a positive credit of 41 cents on the trade, which is about a 69% return, so just shy of a 70% return total. I was looking for 100%, but like I said, I didn't mind taking a quick win there. And so what happens, let's just type that in here, is now I actually have a net credit on what is naturally a net debit style trade. So what does this mean? Well, it means I can't lose, right? The worst case scenario is I walk away with the 41 cents of profit. That's guaranteed at this point. As long as I don't break apart this trade, that's locked in. My max profit potential is 13,375. If we close there, is 541. It's the $5 width spread plus the 41 cents of profit that I already locked in. So that's my max profit potential. So worst case, I walk away with a 41-cent profit per contract. Best case scenario, I walk away with a 541-cent profit, right? And so NDX, because it's a cash settled index, now all I have to do is wait until market close and we'll see what happens. And that is a great way to avoid the pattern day trading rule because as you notice, all I did was sell to open or buy to open strikes. I haven't closed anything out. And by doing this, it doesn't technically count as a day trade. So as long as I don't try and close the butterfly at close, as long as I let it cash settle at the end of market, then I won't get hit by a pattern day trading rule. And that is a great way to avoid those stupid rule, in my opinion. If you're trading an account under 25,000 and you're looking to trade options, because that way you never have day traded, right? There was no day trade that actually occurred. You didn't close any of your strikes. And now what you have is you have a guaranteed profit with a bonus trade going into the close. So if NDX closes anywhere between 13,370 to 13,380, then I will have a bonus profit on top of the 41 cents I locked in. And if it goes and closes right at the pin here at 13,375, then I'll have a max profit potential of 541. So not a bad trade, right? Not a quick win overall. And yes, CJ, absolutely. At NDX, it does cash. We won't have to worry about trade into the close. We'll just, it'll be fun to watch basically and see, okay, are we going to be able to close anywhere around this range? And if so, great bonus profit. And if not, we still basically took back a little shy of 70% return on our risk and walked away with that profit for the day either way. For those of you unfamiliar with butterfly strategies, basically what I mean by you can't lose on both sides of the trade is if you are completely out of the money, you win on the credit spread side of the trade, right? Because that's what you want to see with the short strike, but you lose on the debit spread. If all of a sudden we're at 14, 13 1,400 into the close, then we win on the debit spread side of the trade because it's completely in the money, and we lose on the credit spread. The idea around butterflies is you really wanna trade right around your pin strike into the close, or at least somewhere in between what you call the wings, which are your 2 bought to open strikes, either 13,370 in this case or 13,380. If we can close anywhere between those 2 strikes, then you win on the debit spread and have the possibility of winning on the credit spread too. So it's a butterflies are a really great strategy. I used them a lot last year, with debit broken wing butterflies. There are different types that you can trade. But from a profit recycling perspective, it's a really great way to avoid the pattern day trading rule, still lock in a profit, and then you can set up bonus trades. And if it's cash settled, right, you can use same day expiration and not have to worry about any risk of assignment. If you're doing this on something like Tesla, then usually you want to make sure you're at least out a day. That way you can still take the same move without technically day trading, but you don't have to worry about it going into expiration that same day. You can look to the next day, right, to then close out the trade and still avoid that pattern day trading rule while avoiding the risk of assignment for your account itself. So, LT, this is mind blowing. Um, and so LT is asking for the strategy. Does it only work if your first trade is a larger credit? Can you do the opposite? Absolutely. Like I said, this is just one way to profit recycle. So one of the things we're doing here at Simpler, let me see if I can pull up the document. I don't know if I have it here, but profit recycling, the way I look at it is you're basically using the option chain to your advantage. And if you're familiar with option strategies, then it's really easy either an intraday move like this or management for a trade, right? Maybe you're looking at a bullish trade and it starts to go against you. It's easy to strategy into another to be able to either lock in profits like I did in this case, or trade, or all of a sudden things start to turn flat. Well, there are ways that you can then manage that trade and flip it into something like an iron fly or an iron condor, something that the consolidation or pattern that I'm seeing. So I'm trying to get this document load. I apologize, guys. Whenever I have a lot running on my computer in the background. back in on. I don't like. Still go to this one. You give me one. Oh my whatsoever. Okay. Are we no sound still over on YouTube? Can you guys hear me? And Twitch? Or is that still not coming through? Make sure it's on the right mic. Okay. Sounds good. Okay, thanks, Dakudo. Appreciate it. I don't know why computer decided to randomly switch to my camera. My camera mic is awful. And I have it set on the computer. It's not supposed to pick it up, but it does do either way. Let's get, and then we can get back to the topic. Perfect. Thanks, Charles. Appreciate. I just have two places to. Can you guys hear me in the master now? Back, choppy, should be good. Slow to me. Computer like or something. Not today. No, okay, that's what I thought, Mears. I'm clicking the button, so it's just should be audio now in this room. So we should be good across the board. Okay, perfect. I apologize, guys. Between the computer slowing down some, I keep saying I'm having connection issue. Apologize about that if it's choppy. Let me know if the sound goes off again, but it should be now picking up from my main mic rather than pick up from my camera. And I'll look back at trying to get that disabled because it's not. And I forgot, I'm not sure where you guys off. Basically, the profit recycling strategy. 007. Yeah. So let me not hit my mic so it messes up again. Starting with a vertical spread, jumped into this trade at 59 cents whenever we are at support levels, and then just looked for a move to play back up into resistance. It didn't even necessarily need to reach our strikes in order to lock in a profit. All we need is for it to happen sooner than later so that we don't get hit by theta decay on the trade itself. And it did, right? It bounced up quite nicely right back into resistance levels. And so right at the start of the session, I mentioned I wanted to go ahead and lock in the profits. That way I could focus on fixing my tech issues here clearly, but really focus on answering your guys' questions, talking about the market and things like that. And so what we did is we opened a credit spread for a dollar. And so by starting with the debit spread and then waiting on that bounce up to occur and basically legging into the butterfly by following up with a credit spread, we create a standard butterfly, but we did so for an overall net credit, right? So as you can see here, we jumped into the trade for a 59-cent cost basis. We put on the credit spread for a dollar. So the difference between those two is a positive credit of 41 cents. 41 cents is what we locked in. That is the worst case scenario on this trade now. As long as we don't break apart the butterfly, worst case is we walk away with a 41-cent profit, which is just shy of a 70% return on risk. The best case scenario is if we close at 13,375 today. If we close at that level, then we will actually get a max profit potential of 541. The 41 cents of net credit that we hold on the trade already, right? That's our guarantee at this point, on top of the $5 width of the spread. So that would be the best case scenario. If we close anywhere in between 13,370 and 13,380, then no matter what, we should walk away with some sort of bonus profit on this trade. Now, I don't know if we'll close there, right? I mentioned that would be like basically right by or slightly above the highs of this morning. So maybe we'll get up there. Part of the reason I jumped into this trade is because I liked the bullish sentiment on the hourly chart. We went right back down to intraday support, held it, looked like we were going to bounce. And so that was our entry on the trade. And then all we did was play it up into resistance, locked in the quick win there. And that avoids the pattern day trading rule exactly, 007, because we let it cash settle. So as long as we don't go about closing this butterfly into the close of market, we didn't actually set any closing order for the day. All of these moves were either selling to open or buying to open strikes. So as long as we're not selling to close or buying to close anything, then we won't get hit with the pattern day trading rule. If you let a trade go into cash settlement, it technically closes the trade after market close, right? It takes into consideration where the close of market was, aka where NDX closes for the day. And then wherever that closes, it settles out all the different strikes and options and either gives you money or it takes away money, depending on where your strikes are. But in this case, we don't have any risk on the table because you can't lose on both sides of a butterfly. You either win on the debit spread, lose on the credit spread. You win on the credit spread side of the trade, lose on the debit. Or if you're somewhere in between the two long strikes, which is your bot to open strikes, so the 13,370 strike, 13,380 strike in this case, as long as we're trading anywhere in between those two levels, you get a bonus profit. And so this is just one of the ways to profit recycle. I know somebody in one of the rooms just recently asked, like, is this the only way to profit recycle? And the answer is no. This is one way that you can do it, a perspective, certainly. But you can profit recycle entry, avoid the pattern day strategy was really first. Or you can profit recycle for management. And so you can see here, here's a list of videos that I am currently working on right now. And I have 90 videos in length. And mind you, these aren't all the option strategies that are out there. These are just the ones that I probably use the most within my trading. But they're all the different ways from flipping from one strategy into another. So the first bit of videos that you can focus on here, where it's a long collar put into a debit spread, into a spread, a standard butterfly, a broken wing butterfly, um, a diagonal, a calendar, an ironfly. Those are all the different ways that you can profit recycle from an intraday perspective and lock in a profit, um, or arguably do it as a management move. But you can see for today, for example, we started with a debit vertical spread and went into a standard butterfly, which is number 13 on my video list. So that is, I'll probably use this trade example actually for that. And that is an example of how you can use a debit spread and then go into a standard butterfly off of an intraday move without technically day trading. But these are all the videos that I'm currently working on in the background in between my trading and room sessions here. So yeah, Polly, it's a slow process. Because what I'm having to do is I'm having to make it educational for you guys, right? I'm trying to get slides together to where you have all the actual points listed out that you need to follow, and then if I have trade examples for it, show the trade example or just show a hypothetical example if I don't have a recent trade off of that strategy. But it's to show you everything that you need consideration if you plan to profit recycle from one to another. So that though is a great way. This is this is really to me the only way to profit day trade without triggering the pattern day trading rules. I know some of you guys are sneaky out there where it, back in the day what you could do is just have multiple accounts open under one brokerage platform and each account would get a limit of 3 day trades. So once you hit your day trade limit in one account, they would just switch to another. But I know this year a lot of the brokerage platforms, I know specifically on Tasty Trade, now it's 3 day trades for all the accounts you hold on that platform. Meaning if you took 2 day trades in one account and then ended up taking 2 day trades in another account, that hit it, right? That hit your pattern day trading rule. And now all of your accounts that hit that are locked until you either one, get above 25,000 again, or two, you wait 90 days basically to get your account back unlocked. And the it used to be where you could have one reset. You would have to ask your brokerage platform because some brokerage platforms have different rules. But on Tasty Trade, for example, I know that you could have one reset every 90 days. So if it was like a oopsie mistake, right? They would let you say, okay, you get one do over, but if you do this again in 90 days, then it's locked until either the account's above 25,000 or you have to wait the 90 days. Now, from what I've heard from people, it's one reset for the life of the account. And that's for somebody who has had that happen to them before, that's a little scary. And so, if you really want a good, proper way to avoid the pattern day trading rule, to me, it's through profit recycling. That is the only guarantee of avoiding it because you are technically never closing any sort of trade that you open. You are only going from one strategy into another. And you are doing so based off of intraday moves, off the idea that if the price of the underlying price moves in your favor, that you can build into a trade strategy that covers your risk and locks in an overall profit, just like we did here with the butterfly this morning on NDX. So, and yeah, Nihan. So the bad thing about the pattern day trading rule is if you get over 3 day trades within a 7 day time period, they'll lock the account to where the only action you can take in the account is closing trades that that you already have open. You can't open any new trades in the account until either one, you get it above 25,000. So if you're in a small account like me, that means you basically have to deposit 25,000 into it. Or two, you wait 90 days. And after 90 days, it gets lifted, which I mean, that's like 3 months, right? So you have to wait a fourth of the year to go without trading in order to lift it. And that would be crazy to me too, because I trade almost every day for over what 11, 12 years now. So that is why I like to avoid that pattern day trading rule any way I can. Um, and so that was the trade we took on NDX. I apologize, guys, for all the tech issues that kind of cut into a little bit of our time today. But if you guys do have any specific questions around something, let me know. Otherwise, let's go ahead PX and kind of talk about what's happened from CPI today, which is basically nothing, right? In reality, nothing has really happened off CPI. Um, we are just on event today. Did pick up the range compared to the last 2 trading days, which is nice to see. The last 2 trading days had a daily range of less than 20 points. On Monday, we had a range of $18.49. Yesterday, we had a range of $13.70. I mean, when you compare that to last year, when the normal daily ranges were like 100 points, that is like minuscule, right? It is small. Um, and so today we at least have a slightly better range to be able to do a directional trade like NDX and lock in a profit. For SPX, our daily range so far for today is about 41 points, shy of 42. So that's not bad. But you can see from a bigger picture perspective, nothing's changed about the daily chart whatsoever. We are stuck in consolidation. Our Bollinger Bands are flat. Our momentum is still resetting. Our compound breakout tools in consolidation. We're building into a great daily squeeze. So we know eventually, once we start to break out of this consolidation, we will probably see a bigger than anticipated move because that's what those squeezes highlight. But we haven't fired yet, right? The squeeze hasn't fired. The good thing about today, from what we can see so far, is our moving averages are attempting to hold support, right? So we haven't really broken below that or the 4100 level yet. So the bears are kind of struggling in that case. But the struggle for the bulls right now is our weekly resistance, which I know we've talked about in here before plenty of times. And that level is around 4,200 with the 100 period simple moving average. And for me, it goes up into 4,260 because that's where the ATR trailing stop is. So that's kind of the range of weekly resistance from what I see on my charts. And as you can see for the year, we've tested that 100 period simple and we've gotten close to it, right? At the start of the year, we tested it just at the start of February. And then we tested it again more recently back here, but we haven't been able to break that level whatsoever. And so that's been a really hard line in the sand for SPX and the indexes to where we can't get this bullish trend going like we typically see in the market overall, right? The market typically trends in a bullish trend, and we can't get that going yet for this year. But at the same time, we're not falling apart either. And when you take a little bit of a step back here and look at how we've been trading for the year, then even though we're in a short-term range of consolidation currently, the overall year itself is also consolidation of basically a 400 point range. The bottom of that range is 3,800 and the top of the range is right around 4,200. So if we can start to break 4,200, 4,260 and hold those levels as support instead of resistance, then that's a good sign that we'll get going in a bullish trend again. If we can't do that though, then we're basically at the top range of our, wide 400 point range. We're at the top of it. And so that to me, right, would show a better probability that we could try and roll back over. Now, unless you have like longer term trades set up to play that rollover, you don't really want to do that from a short term swing perspective yet until we actually start to break support levels. And when we do, it's exactly what we talked about at the very start of the session, which is you only play from one level into another. So, for example, here, if we can actually start to break 4,100, then I would only play down into 4,050, right? That's been the next level of price support that's right near the lower Bollinger Band. If we break 4,050, then we look to play down closer to the 4,000 range. We do have a little bit of support here on 4,030 to be mindful of, but that would be the next bigger psychological target to play to the downside. If we can really break 4,000, then we might actually get going to 3,900 or 3,800 to go back down into the bottom of this yearly consolidated range that we're in. And if we can break 3,800, then we might actually get going into a bearish trend again. But until it proves itself, right, with the underlying price, you have to be mindful of what the technicals are telling you. And right now, all of these technicals are just showing chop. That's it. And so, like I said, the way to play chop is you either do option style trades that benefit from consolidation, things like starting with a credit spread, where as long as it remains out of the money, it's profitable. So you don't mind if it stays flat, you don't mind if it moves in your favor. As long as that short strike's out of the money, you profit on credit spreads, right? And strategies like that. Uh, or you play from level to level. So every time we get close to 4,200, if we can't manage to break above it, that's where you look to short from and play it back down into support levels. If we do manage to start breaking above it, and let's say you jumped into a short, well, then it's a quick stop. right? Because you're jumping in right at that level. So if you jump in at 4,200 because it looks like it's going to hold, and then all of a sudden the next day we're jumping up to 4,220, well, then you're stopped out, right? That's already canceling out of the trade idea. So it keeps your stops really tight, and at the same time gives you a better opportunity to jump in for a more directional trade, just playing from one level into the next. And if that level that you're playing into starts to hold, well, then you take your profits and you look for the reversal trade back in the opposite direction. So that's what I'm seeing there, guys. And I see some questions came in, so let me go ahead and answer some of these. JPL, I'm not sure how I'm releasing the videos just yet, but it is something that I've wanted to do for education for a while now. I'm I'm the trader side of simpler trading, right? We come up, we give them the ideas or the stuff that we want to do and that we're looking to do, and then the internal side of the business is the one to figure out how they're going to release the videos. So I don't know if it's just going to be put into the education center or what. But I will certainly let you guys know as that time gets closer. Right now, all I'm trying to do is just work on getting the videos set up and recorded so that we have access to them in general. And then Earl's asking, to what extent do longer squeezes tend to break one way or the other? That depends. Unfortunately, sometimes a squeeze will print for just a couple of days. Like here, for example, this was a low compression squeeze that printed for a couple of days before it started to fire ultimately to the upside. Here, we've been in the squeeze a bit longer. Sometimes a chart might stay in consolidation for a while and that squeeze just builds up energy. So, what I like to do personally is if I see the squeeze building up, then I note, okay, that might be a greater than anticipated move, but I look at my other indicators to help identify when that break might actually occur. So, for example, on this one, we never quite got the signal on the compound breakout tool. Usually I do, but you did get a cross above momentum. So that started to turn into a bullish trend signal. You started to hold support and bounce up. You started to have the Bollinger Bands flare open. So all of that was your clue that the squeeze could fire to the upside, which is what it ended up doing. Right now, on the current squeeze that we're in on the daily chart, we don't have any clue yet on which direction this is going to fire. Momentum isn't giving us a directional move right now. It's in consolidation. The compound breakout tool is still in consolidation. The Bollinger Bands are still flat. The 10 and 30 moving average are converged. So there's no clue yet on the other indicators that are telling me which way the squeeze could end up firing. Actually, all of this consolidating signal is telling me that the squeeze, if anything, is building up more energy. And we just need to be patient until we do get either more of a bullish or bearish signal, which could then be our clue to say, okay, yeah, it actually looks like it's going to start firing up or it's going to start firing down, and then play the squeeze that way. So I hope that answers your question. And CJ, see that was the same question you had. So I hope that answers you as well. And then, yeah, Dull, let's go ahead and check Meta. Happy to do so. Pull up a new symbol here. Of course, guys, not a problem. So on Meta, last two earnings, right? The earnings for this year so far had very strong bounces to the upside. Um, So all of that, looks pretty solid. But as you can see here, it was kind of short lived. We had a move outside the third deviation Bollinger Band. Usually, when that happens, it's either a case of the price is going to stay trading within that range, or in this case, because it's the upper Bollinger Band, it could actually continue to the upside. And in this case, you can see we had a strong gap up. We did technically get a little bit higher than the high of that day, but for the most part, we traded within the same range of this bar that allowed the technicals to catch up with the price. And then once the underlying price gets inside the second deviation Bollinger Band, again, which is this inside blue line, usually that's when we'll either one still consolidate until the 10 period simple catches up with the price, or in this case, the price will pull back into the 10. We test that as support. If it holds well, then usually that's a re-entry to play for a bounce back up. But otherwise, in this case, it's not really holding as support. We're holding the price level of 230, but that 10 period simple is kind of going ahead of the underlying price, and now the underlying price is holding that as a bit of resistance. On top of that, we see that momentum still in the process of resetting, so that's either a pullback signal for the underlying price or a consolidating signal. So you can see right now that's matching with the consolidation. On the compound breakout tool, we have a pullback signal. So when you're in a bullish trend and you start to get this bearish signal to print, that usually means you're pulling back into support. So last time it printed, we pulled back into the 30, that held. And then, of course, off earnings, we had that bullish signal print. That canceled out into a pullback signal. So if we start to really break below the 10, that's a good sign that we might go down and test the 30 period simple and ATR trailing stop. If this doesn't cancel out into either a consolidating signal or bullish signal again. So, I mean, the overall trend's bullish, but I don't see a bullish trade I would necessarily want to take here on Meta. One, I'm not necessarily a big fan of Meta myself personally, right? But if we take out that just personal point of view there, um, there's not much from a technical aspect that's telling me this is really trying to bounce. If anything, it's telling me that it's resting, right? That it's at the very least taking a pause. Um, and sometimes a clue for a stronger reversal will actually come in off the weekly chart. So off the weekly chart, part of the reason we're struggling at this level is because we're right by the 100 period simple. And for those of you who really followed along with me last year, y'all know that when we've been trending below the 100 period simple in a bearish trend, and then we reverse back up to test it, you need a lot of strength to really get going into a proper bullish trend again. And if you don't see that strength happen when you break the 100, there's a possibility that one, it will just hang out there and wait. But two, it also can end up being a good reversal spot to actually trade it back down. On top of that, momentum's at the top of the axis right now. So we're basically close to weekly exhaustion levels, or at least what appears to be weekly exhaustion levels as of right now. And we are struggling right around the 100 period simple, attempting to hold it as support, but we're not really getting a strong bounce up to get going. So all of that is a clue to me that Meta could either start to stall here, right? At the very least, maybe go back, test the 10 again as support, or that we could actually start to get a bit of a reversal here back to the downside. Now, I don't have any clues or indicators yet saying, hey, the reversal to the downside starting to happen, but that is what you want to be mindful of occurring. Because usually, if we were breaking above the 100 and we were going to really keep going in a strong trend, we would have either one, already started to see it, and two, there's usually room on momentum to keep that trend going. The fact that we're at exhaustion levels here and we're stalling at the 100, not a good sign for the bulls, at least in the short term narrative of things. So that's what I see for Meta right now. I don't really see a trade idea necessarily I would want to take on it. Um, but if you're in a trade, that's what I'd be aware of. So we have about 2 minutes left for the session here, guys. Like I said, I do really apologize about the tech issues. I don't know why it was so slow for me this morning between that and the mic. But if you guys have any last minute questions, let me know. Or a last minute symbol that you want me to look at. Otherwise, though, from intraday moves, as we can see here for SPX for the day, and earlier you're looking at a body placement for a fly. So are you looking at an iron fly or an iron condor kind of situation to play the chop for today? Or are you trying to look at just a standard butterfly? Let me know. But an iron fly, actually, I don't think a standard fly. Okay. For a standard fly, if you're looking at it for a 0-day expiration for the day, I would actually probably at this point consider more an iron fly, which is like a standard butterfly, but it means that you're already at your short strike. And what I mean by that is wherever you want to place the short strike, usually on a standard butterfly, you do that in a way to where you're playing either up or down into the standard butterfly, right? So you have something like this, and you're saying it looks like the market's going to bounce up into 41.40. And so that's where I think we're going to go into the close. And that's where I want my short strike to be. So that's where I'd place the standard butterfly. In this case, though, right, at least from what we can see on the technicals so far for today, we are trading kind of in the middle of the range, maybe a little bit closer to the bottom. So we have consolidating signals on the compound breakout tool. Momentum technically more bullish, but our Bollinger Bands are extremely flat. So even when we put pressure on the upper Bollinger Band here and on the lower Bollinger Band here, the Bollinger Bands themselves weren't budging. That's a good sign that they're not anticipating, at least as of right now, right? They're not anticipating a break up or breakdown. They're anticipating the underlying price to stay within this range. And we have a great squeeze building up, but it may not fire today. It might take a couple of days for that to go. So, with all of that being noted, I would actually, because we're in the middle of the range, look at something to trade the chop a bit more. So, let's just see, the bottom of this range looks to be around 4110 ish. The top of the range, very top of the range, was like at 4150, 55. But currently 4140 kind of seems to be the level. So what I would probably look at is, if this is of course within your risk tolerance, I'd probably look at something like this, which is an iron fly. And now currently this is about a 950 profit potential, 550 risk. So it's not bad on the risk versus reward necessarily. If I did a standard butterfly here, it would be around the same cost basis, right? You can see 550 risk, 950 profit potential. So the cost isn't that much difference. But the reason why I would lean towards technically an iron fly is because, like I said, we're already at the point where we might just stay flat into the close, right? We closed right around this range yesterday. So it might be a non event kind of day where CPI really doesn't do anything and it stays flat in the market. And in turn, what this happens is it allows, because an iron fly is basically two credit spreads, one on the call side, one on the put side. So the idea is your short strike remains right at the money and the theta decay benefits you on both sides of the trade. So that's what I might consider for today, Earl. Usually for my end of day pin trades, though, I like to wait, unless it's something based off theta decay like this. I usually like to wait closer into the close of market before putting them on, because I have found, usually within that last hour of market, specifically at 220, 40 minutes before market close, you can sometimes get a run in the market either up or down. That's when the algos start going. That's when, the big hedge funds are doing like last minute moves for their 0-day trades. And in turn, you can usually get a directional move off that and have a better idea and probability of where the market's actually going to close versus trying to put on a trade now, which is still kind of a flip of the coin, right? Because currently we're going into the lunch hour here and the lunch hour remains flat, but sometimes at the close of market, it can pick up on those moves again. And then really quickly, I know I'm a little over my time. Mears, Duncan, anyone who's on the other side of the mic, let me know if somebody's supposed to be on after me and I'll stop myself. But if not, I'll do these last two. Okay, thanks, Mirza. So I'll go a little bit later just because we ran into those tech issues really quickly. And let me look at UPST and Microsoft for you guys. And those will be the last two things I look at here before I turn off the mic and camera. So starting with Microsoft, Microsoft's been in a great bullish trend overall this year. Right? This is kind of what we want to see the market do, which is actually make higher highs and higher lows. But in this case, Microsoft's the one doing that. Now, currently, right, it's very similar to Meta. We gapped up on earnings. In this case, we actually trended higher off that third deviation Bollinger Band snap. Then we started to consolidate. It allowed the technicals to catch up with the price. So that's all looking good. Momentum's reset a little bit, but there is still room to move into the top of the axis. This is still a bullish signal. And unlike Meta, Microsoft is actually doing a really good job of holding the 10 period simple here. So overall, I would say this still looks pretty bullish to the upside. But once again, the question is how much energy is left in this. So let's look at the weekly chart. And on the weekly chart, there's actually still a little bit of room on momentum to move higher. We're getting very close to the top of the axis, but there's still a little bit of movement left that we could see. This is still bullish. Bollinger Bands are still flaring open. So I'd say if you're in a bullish trade, this still looks good to try and kind of keep that strength higher. If you're not, though, it's not necessarily the best place to jump into it, at least from a weekly perspective. You're nowhere near support, so it's not as clean of an entry. The daily chart isn't as bad because we're currently trying to bounce off the 10 period simple. But I would say still be mindful of your risk. If your normal risk tolerance, let's say, is $500 per trade, you might only do a fraction of that if you try and jump into a bullish trade here. Just because, like I said, this has already had a great run up. So if all we do is start to chop, right, we don't get much more of a move that allows daily momentum to reset, that allows the weekly chart to kind of take a breather before it keeps going. Um, then you wouldn't want to do a strong directional bullish like a long call trade because it may not get up to that level. So if I were to look at a trade at this point, I'd probably, if it was like this week's expiration and there's premium, I'd lean towards an unbalanced butterfly probably. And that's not much premium. So maybe if we go out one expiration to next week, that's a bit better. So the idea is we're placing our short strike right by the 10 period simple. We don't anticipate a break of the 10 period simple. Um, so with this style trade, this is basically a butterfly where there's an extra contract on the credit spread. If it remains out of the money, then the credit that you open the trade for is your locked in profit, which is around 54 cents currently. If we end up pulling back but hold support, right, which is what we're trying to look for, and so AKA we hold at our short strike, that our max profit potential's around $3, the 50-cent credit on top of the 2.5 width of the spread. That's your max profit potential. The risk is if we really start to break below the short strike. If we break below the short strike, then you have to be okay with a capital risk of about $2. Right? So it's not a bad risk versus reward from the max profit potential. And the reason I like doing this over a pure credit spread is because the butterfly portion of this trade kind of acts as insurance to where if you do pull back towards your short strike, but we still hold that level because you place that short strike right in line with the technical support that you think is going to hold, then it can actually allow for a really great profit potential versus if you do just a pure credit spread at that level. Yes, it allows for a little bit more premium on the credit spread aspect, but you can see that risk versus reward doesn't look as great. And if we pull back to 307.50 and stall there, the issue is the unbalanced butterfly that actually starts to gain in value from the butterfly portion of the trade. The credit spread, you'll likely have to hold going into the close itself for that theta decay to really kick in because if you're right at the money, the downside is that premium and that strike that's at the money, it stays there, right? Because it only would take a slight move for it to go in the money and AKA go against you. And so that's why if you're going slightly out of the money with a credit spread idea, I usually lean towards unbalanced butterflies because they give a better risk versus reward scenario and kind of give you insurance on the butterfly portion of it, the trade itself, to kind of help you out with. So that's what I see from Microsoft. I don't know if I'd personally take a trade idea off that, but if you forced me to, that's what I'd be leaning towards at this point. And then last but not least, let's pull up UPST here. So on UPST, just had earnings, bounce up, strong third deviation Bollinger Band snap. So normally I wouldn't jump into a trade here because we're too far away from support. This was already a really big move. The only way I'd usually jump into a trade off of a move like this from earnings is if I still had like a valid squeeze and room of momentum. And though I do have room of momentum technically, there's no squeeze. So I personally wouldn't take a new trade idea off this. But if you are in a trade, then and especially if you have multiple contracts, then don't hesitate to take profits, but you might leave one contract on as a runner. And the reason why is because the price has exceeded the third deviation Bollinger Band. And like we talked about a little bit earlier in the session, or like we saw in Microsoft, when we exceed this level, as long as the sellers don't come in and really drive the price back down into the close, there's a good probability that we'll either one stay within this bar's trading range and allow the technicals to catch up. Or two, we can actually continue higher off of this move because when you exceed outside the third deviation Bollinger Band, it sometimes causes a case of FOMO where anybody who is short sees this move and they're like, oh my God, I need to get out of my shorts. Or if anyone was looking to get long on this, and sees this move, right? They have that case of FOMO of, oh my gosh, I need to jump into it. I can't miss the remainder of the move. And between those two thought processes, that actually is what helps continue to drive the price higher. So you might consider leaving on a runner, but because there's no daily squeezed involved, I wouldn't necessarily myself look at a new trade idea here, especially because once again, keep in mind, we were trending below the 100 period simple and this is our first real break above it. So if it's like this one where it's short-lived, right, that might be all of the move that occurs and we drop right back down again. So that's what you'd want to be mindful of there. But that is my time today, guys. So thank you so much for joining me. Hopefully, we get all the tech issues fixed by next time. So that way I'm not having to pause the stream to deal with the mic or anything like that. Um, as always, may the trade be with you, my fellow Jedis, and I look forward to talking to y'all next time. Bye, guys.